So now what? You've probably asked yourself that question 100 times because for decades you've been doing what you have to. And now you're wondering, have I actually done enough to do what I want to do? Would you like some help? That's why we're here, to take you from I have to wow, I really get to. I'm Brad Johansen with Omega Wealth Private Capital, and this is Wise Money. Glad you're with us on Wise Money. Brad Johansen alongside Joe Wilson III, Omega Wealth Private Capital. How are you, my friend?
Together, me and you and me. Are you wearing green?
Negative.
Bluish green?
Yeah, this is blue. You're wearing
blue and green.
Uh-huh.
I'm diversified.
You're aquaing today.
But you're wearing a little, yeah, well, you know.
You're resplendent, may I say.
Spring has sprung.
Man, was it we haven't had a winter like this in a decade?
It's a long time.
In Cincinnati?
Too much shoveling for me.
Way too much shoveling.
Very thankful for our business travels that allow us to escape the white
get a little sunshine here. We want a little sunshine in the market, don't we? I mean, the idea is that things have been a little bit rocky, uncertain. We don't like uncertain. We don't like change. Can I go back to the great financial crisis? Because I know you've told a bunch of stories about.
Well, we talk about it in the book quite a bit. Yeah.
And we talk about which is this. This is yours, free. 5 agreements to be and stay retirement ready. You can scan the QR code for this. I want to go back to great financial crisis because you were in a different place than I was. You were just getting started in the business. I was in the TV business for a long time. I was at Local 12. During that crisis, and I remember the general manager coming in and saying, hey, we're going to have to lay some people off, and people are going to have to take some mandatory breaks. You're not going to be able to work. You're not going to get paid for it. We've got to get through this somehow because we've got to adjust. The money's not coming in. We've got to deal with some of these things, so you're going to have to adjust because the company has to adjust. I want to talk about adjustments right now because we have a lot of people in government who are going through layoffs. Yeah. We have people in corporations who are going through layoffs that we have to adjust now. And a lot of that is hitting, like you talked about in the great financial crisis, where people were done. They had just retired, and now they can't retire anymore. This is asset preservation that we talk about. It is in Chapter 3 in this book, and it's trying to figure out to hedge or not to hedge as we move forward?
Well, let me just pose it this way. Imagine what you have on your retirement savings. We're just for an example, Joe, let's just use $1 million.
Okay.
Right? How would your life change? How would it be impacted if that million went to 2 million?
I would like that.
Oh, yes.
Doubling your money is good.
Sign me up.
Yeah.
Ding, wouldn't that be great? But we have to ask the other side of that question. How would your life, and in your 63, getting ready to be 63, how would your life change if your retirement savings didn't double but were cut in half? And so if it was $1 million, you now only had $500,000. See, a lot of times we get this recency bias. We think it's a technical term. It's behavioral finance.
Sure.
There's amazing classes on it. But we get used to, well, this is what it's doing. This is what it's going to do all the time. And I think sometimes we forget the market can be volatile. It doesn't always just shoot out like a cannon. I do believe there are going to be greater years in the market than there are negative years. But the challenge when it comes to retirement, the challenge when it comes to retirement planning is understanding how are you going to be positioned? Are you going to be subject to those negative times and feel that brunt face on? Or are there things you can do right now, right at the period of life that you are in now, as we're coming in even to some of the greatest markets we've had in a long, long time, and interest rates being still at a wonderful place. We're no longer getting 0.1% on our savings. We're actually getting a decent rate of return. There are opportunities and tools that no one out there is talking about that must be looked at and must be explored So you can have the confidence saying, wow, if I retire, maybe I've just retired, and we go through some negative periods, I have a place to protect and get my income and allow the other dollars to grow. And that's what it needs to do to help us beat inflation.
You say all of this, and somebody says, how do I know if I'm ready? And maybe I want to lead you into this, because we create things that try to simplify these things for you and answer some of the questions, which is what the book does. We want you to have a copy of the book, but we also want you to be able to take this out and say, you know what, can I go through this and get an idea? What are the 5 agreements? Well, the 5 agreements, it's in the underscore: to be and stay retirement ready.
Oh, it's the stay.
How ready am I? Which again takes us into this new quiz. So we've got the book, but we want to make it simple for people to understand. And I love this quiz because it is
easy,
very user friendly. If you go in, you want to have something. Can I do this quickly? Yes. Will it give me an understanding of where I am?
It's going to make you think differently. And I think that is, I believe, that is one of the biggest things when we sit down with pre-retirees and just folks that have just retired, is having the perspective and the knowledge and thinking about things just a little bit differently than you've always thought of.
So, Randy, I'm going to have you switch this from the 5 agreements now to owquiz.com.
No, you're calling it audible. Little Joey
I am
Burrow
calling it
action.
audible just because I want people to be able to have an option to that. I want you to have a copy of the book, but I want you to be able to say, how do I know? When we say the certainty of uncertainty, how do I know that I should be preparing a little bit more? The quiz kind of takes you through, when we talk about asset preservation, this is so many of you who are coming in the accumulation phase. And I remember meeting with somebody just last week who came in and said, look, I like what you guys are saying in this 5 agreements thing. I think you've done really well. But look, I fired somebody who was my advisor before this. They didn't know what they were doing. I took it over. And you know what? I've got this one. I'm not even going to say it. I have this one company where I've got this stock in. It's been up 20%. It's going to be up 20%. And I'm going to guarantee you, and he said this, I'm going to guarantee you it's going to be up 20% for the next 3 years. Maybe a guarantee is a little bit too much, but I pretty much know where I'm going. I don't really need you. Thank you for all the information. But if this goes the way I think it's going to go, I'm going to be good. And if it goes differently, and it's already going differently than he thought it was going to go,
40% just since December.
You're not hedging.
No, and he was hoping on a plan. And listen, we're not right for everyone. I think this is important to understand. We do have a philosophy. We believe that you need a foundation of your assets, that you have a place to go to get income when it's storming. You need growth assets. We call it the roof. You know, when a storm comes in, the roof can get hit. That's where your growth comes from. That's what you need to have longevity and help fuel you down the road. But if we don't have a good foundation, we learned it as kindergarten kids. The 3 little pigs. There's a time when the wind's going to blow and the wolf's going to come and huff and puff, and the markets can be blessings and they can also be cursings. And it's about how firm your fiscal house and foundation are. I know we got to go to break here. When we come back, I want us to break in and really start diving into a company that I find interesting that survived that great financial crisis by doing a few basic things. And I remember it impacting me then, being in the business and watching folks. It's had a huge impact on how we structure financial planning. I want us to dive into it a little bit over the next segment. Listen, you get one shot at retirement. Volatile years are going to come. They're going to hit, but it's how you plan them, how you project them, and making sure you have a place to go to get your retirement income that is not subject to that volatility is what will determine your success 20 and 30 years down the road. We're going to go to a quick break. We get back, we're going to dive in on a little bit of a company introspection, I guess you could say. We'll be right back. You're watching Wise Money.
How are you invested in the market? Is that traditional 60-40 plan still the way to go? We'll have the answer from Wise Money next. I've got $1 million question for you. Are you ready to retire? Sorry, I don't know is not an acceptable answer. Now, you may be years away, maybe you're weeks away from calling it quits, and you still don't have a plan. You're not alone. So scan the QR code. It's free. Go to owquiz.com. We've created a quiz to give you a clear idea of retirement readiness. What's your income source? What's your Social Security at full retirement age? Do you know what your tax debt is? Plan for health care? I know, it's a lot. Scan the QR code. Get your retirement readiness score. In just a few minutes, you will have a much clearer picture of how ready you are and which areas might need a little more attention, because if you're not ready to retire with enough money to last until your last breath, when would you like to know? Stop with the I don't know. Get a second opinion. It's free. Scan the QR code, owquiz.com, for your retirement readiness score. Ready now?
Hard to believe I've been in this industry almost 19 years. I've seen a lot of folks that have had successful retirements that have come in and come to work with us, and things are going well. They just want to improve it. I've also had folks come in and we see it the other way, where it has not gone the way that they've wanted. So there's a perspective there. We see a lot. We get the opportunity to get wisdom from that. So it led me to write a book after 18 years. And we call it the 5 Agreements to Be and Stay Retirement Ready, because you have to have all 5 agreements. You have to have an income plan. You have to manage for taxes. You have to have an investment growth bucket that is able to sustain and beat long-term inflation. They all have to work together. But you also have to have a legacy plan, because we're all going to die one day. And how do you pass those dollars on most efficiently? And what about asset preservation? You're looking at the cost of healthcare and where it's going. What's our hedge against that? It's the #1 area we see folks not even prepared, that and taxes. All 5 of those agreements must come together. It's why we say to be and stay retirement ready.
Glad you're with us on Wise Money. Brad Johansen with Joe Wilson III, Omega Wealth Private Capital. Can't wait to see you guys in the office. Scan the QR code, hit the landing page. The book, I will continue to tell you, is just out and yours. I'd love to send you a copy. Love to hand it to you as you come into the office. You sent us to break, Joe, talking about a company, Southwest Airlines.
Yeah.
We went through a couple of situations, both in the great financial crisis, then during COVID, where airlines were like, can't handle this, can't handle this, can't handle this. You want to point out Southwest and what they did in a hedging.
It's fascinating to me, because if you go back and you look at history, it never repeats itself, but it's a great way we can learn. And during the great financial crisis, most of the airlines were getting crushed. In fact, Delta, love to fly, and it shows, isn't the exact same Delta. They had to do a bankruptcy reorg. But one of the companies that just flew through that was Southwest. They decided, as they started to look from a financial planning situation of their company, where is our biggest risk as a corporation? What fascinates me, Joe, is it's not very different from Mr. and Mrs. Retiree watching right there at home. They realized that their biggest risk was their expense of fuel. Look at your daily expenses. Think of what you have to have, your necessities, and the lifestyle that you want to have in retirement. Add those up and look at what you have coming in, maybe Social Security. Usually there is a gap there. In Southwest world, they realized, wow, if fuel cost went significantly higher, we could financially be in a whirlwind. So what do? They hedged the price of oil. This means they protected their balance sheet, that if one of the worst things that could happen to them was fuel costs going through the roof, that they could get their fuel set at a certain price and didn't have to pay what everyone else was paying. Fuel cost in 08-09 went up to $140 a barrel in oil. Think of that. I remember vividly, not only were folks at that time getting crushed in the markets, their expenses were going up because just transportation was through the roof. I worked downtown at the time. My wife did as well. We wouldn't even drive downtown. We stopped. It changed our patterns. We couldn't afford to drive down separately. We didn't even drive down together. We went, hopped on the bus, and rode down to save fuel costs. Southwest did that, and it ended up protecting them in such a way where all the other airlines were completely exposed. Why? They hedged their biggest risk. What's your biggest risk? Wall Street Journal just recently came out with an article. So the #1 fear for the modern retiree right now is running out of money, the loss of income. When you look at the holes in the bucket, if you will, inflation and taxes, having a sound income plan and taking the amount of money you have saved and said, I'm going to earmark a part of this and I'm going to hedge our biggest risk, longevity and running out of money. Having a place to get income when the markets are not behaving. There's nothing worse than having to get a car and then having to go sell an asset that's down to get it. Why do we do that? Well, probably because we didn't plan for it. We're saying if we sit down and do some planning now, we can have an income engine that is coming to you regardless if the market is up or down. Great example. We had someone come in recently. Last year, 2024, markets were great. They had been taking their income out of the market side of the bucket, the growth bucket. Why? It was up. 2025, started 2025, it's been pretty volatile. Flip that around. They're taking it out of their hedge position. Why? In their case, just like Southwest, fuel costs have gone through the roof. You have to have a place to get money that is not subject to the negative, because that's how you're able to sustain 20, 30, 40 years of retirement.
I'm going to talk about that because the last 3 people that we met with in our office before we came here are perfect examples of asset preservation. There was fear, which is common. I can't let this go down anymore. What can I do? The last 3 people that we sat with said, you know what? There are better solutions out there right now. And sometimes we bring up this annuity situation and people go, I've heard those are bad.
Well, there sure are some bad ones.
And there are some bad ones. The idea is that the products right now, the solutions that we have to be able to create asset preservation for you, to be now ready so that you can say, I don't have to worry about that spot, and I want to make sure, because if people are saying to us, I can't lose anymore right now, this is all I've got.
Well, they're worried about the runway. They're worried about running out of money down the long haul, because think of what we just went through. It's 25% more expensive to live today than it was just in 2020.
Right.
So everyone's worried about these costs. I think what we have to do is, one, it's individual. You spend money differently than how I spend money, how Bijo spends money. And if you're getting ready to retire, you have to start with a spending plan. You have to develop a written income plan, whether you're going to get that from bond interest, whether you're going to get that from dividends, or whether you're going to peel off a section of your money and say, this money has one job, to provide income for me as long as I have breath in my body, regardless of what's going on in Washington, regardless of what Fed chair is going to come out and talk about and interest rates move. I want to remove that risk. If we can do that with the least amount of money possible, that helps you for an after-tax and after-inflation number, sustain the lifestyle you want, that allows the rest of the money time in the market, and time in the market is undefeated. Because what have we done? We removed ourselves from having to sell it when volatile markets come. I want to hit on this before we go to another break. Every 6 years, on average, we will see the market historically have a 25% pullback.
Okay, that's an average.
An average.
We preach against averages.
Sure.
But the idea is that if you understand history, and things have been going really well for about the last 5 years?
Well, I think things have been going well than a couple of good other years, 16 years.
So what's the point?
The point is this: if you're looking at an average over a long period of a 25% decline, can your income plan handle a 25% decline? Think about that. If you've got 30 years of retirement, that's a lot of years we have to make sure that we are able to get income somewhere that's not subject to that decline. And here's where it comes home. Because in 2008 and 2009, I mean, from March the 9th, 2009 was the low of the market.
Yes.
If you go back to the start of that in the beginning of October of 2007 when Lehman Brothers collapsed, that's almost a 57% decline in the stock market. That wreaks havoc in income planning if you are managing it all the same way. It probably didn't have the impact on you while you were younger. I mean, think of these numbers, Bijo. 16 years ago, if you're 70 today, you're only 54, probably still working.
Yeah, a lot of time to go.
If you're 65 today, well, you would have been my age, 49. I'm still saving. I'm still investing. I've got time. Don't like it, but I'm buying those assets on sale. If you're 60 today, you are in your early 40s. Here's the truth. If we have those markets, and I hope we don't, but over a 25 and 30 year period, statistically, there's going to be some ugly days. And so how do we manage that? We start with understanding needs-based. What do you need today to cover your necessities and your lifestyle? How do we then adjust that for a good inflation number, not some generic 2%. 50-year average on inflation is 3.8.
3.8.
And how do we adjust that for after taxes? So you can leave confidently right now that I've got a place to go to get my necessities and lifestyle throughout my retirement. And then that leaves the rest of the money to almost feel like you're hopping back in time. Let it grow, let it grow. Give that time to let the market do what the market does. And yes, it goes up and it goes down, but we're not going to be running to that bucket to get income. Why? We've already structured that. You have to give every dollar a job. You can't manage it all the same.
We got to go to break. Be right back. Just ahead, can you survive another market crash? Why current volatility makes having an advisor with perspective more important than ever. Stay tuned.
I think sometimes you have to look back to go ahead. I remember vividly being 11 or 12, and my dad had an amazing job with a shoe company. It was a huge boot company. Had all the swag, the backpacks, the bags, the boots. Things were going great until it didn't. Dad suddenly found himself without a job. I remember the impact to my family and how just life shifted. I could tell things were not the way they used to be. And so for a while, it was different, and income was different for my family. I look back at that and realize as a financial advisor, having started in this industry right before the great financial crisis, how important income planning and having an income engine is to folks being able to maintain the lifestyle that they want. I mean, think about this. Folks have worked 30, 40 years at the same job. Why? So they could amass wealth to one day live off that. They're going to fire themselves. It all revolves around income. And if it's not there, the impact that has to retirement, no one wants to live through that.
I've got $1 million question for you. Are you ready to retire? Sorry, I don't know is not an acceptable answer. Now, you may be years away, maybe you're weeks away from calling it quits, and you still don't have a plan. You're not alone. So scan the QR code. It's free. Go to owquiz.com. We've created a quiz to give you a clear idea of retirement readiness. What's your income source? What's your Social Security at full retirement age? Do you know what your tax debt is? Plan for health care? I know, it's a lot. Scan the QR code. Get your retirement readiness score. In just a few minutes, you will have a much clearer picture of how ready you are and which areas might need a little more attention, because if you're not ready to retire with enough money to last until your last breath, when would you like to know? Stop with the I don't know. Get a second opinion. It's free. Scan the QR code, owquiz.com for your retirement readiness score. Ready now? I want you to have the book, Brad Johansen with Joe Wilson III, Omega Wealth Private Capital, the 5 agreements to be and stay retirement ready. Maybe we are a little preachy today, which is...
Well, that's all right. Sometimes we got to be preachy.
The first chapter in this is how to create an income as you're moving out of the income that you've been doing for decades. And what we've been preachy on is the asset preservation and understanding that you have to hedge during these times of uncertainty, because it is changing. And if you don't change and adjust, you talk about the set it and forget it. We're not set it and forget it. And you talked about the 60-40. And you know what? 60-40 doesn't always work. Everything that we have heard before is this is the way to do it. It isn't the way to do it, because if it's not right for you, then it matters. This is why this book... Now, the 5 agreements are for everyone, but the adjustments are different for everyone in asset preservation. Why so important for us to say in the hedging of these times, because the changing is there, that like Southwest Airlines, we have to adjust and hedge for what if. The problem is we don't plan for a lot of what if.
Because you're saying take this job and shove it. When you retire, you're out, you're done. And so what stops? Income. The only thing you have then is Social Security, or if you're getting a pension, then that's a benefit. But if we don't start at the basis and reverse engineer this of what are my spending, where do I have to go to get my money to have the lifestyle I want? And if the hope is I'm just going to leave it how I've had this invested over the last 20, 30 years, it's grown. Well, it's grown because when the market's getting crushed, what are you doing? You're buying into it. It's a little different world on this side. We talk about the Continental Great Divide. When you come out, the landscape's changing in retirement. You are now taking distribution. So if you do not structure a place to go get money when those bad years happen, you are having to sell assets way down. And depending on how long those down markets have and how long they go, can have a very devastating effect, not just over the next 2 or 3 years, but it's the impact it has 10, 15. It's why the greatest fear right now for so many Americans that are getting ready to retire is, will I run out of money? Because they've experienced previous generations, aunts, uncles, cousins, friends, that just retired before the great financial crisis and didn't do this reverse engineering income planning the right way and left it all to the whim and got crushed. That is not the way to go through retirement. Having lived this, I remember sitting at my desk day in and day out and watching just these markets get crushed in 2007, 8, spring of 09.
You had people coming to you in tears.
I watched advisors sit in tears because there was nowhere to hide. It was a market that was unbelievable. But those that survived it did what I'm talking to you right now about. Those that survived it do what our team are going to talk to you. And if you get this book, it's going to give you an insight. It's going to make you think about retirement slightly different. Why are we so preachy on it? Because we've seen this go well. And so many folks that have come in because of the power of perspective that are struggling because they did not set up these principles. This is the day to act. 844-657-1072. When they pick up the phone and you set up a time, we have an amazing team of fiduciary advisors that you could sit down with. Bijo might even be in the office. I might be in the office. We'll come in and say hello and sit down. We work through this as a team. Why? You matter. You get one shot to retire. You get one shot to be, and as we say, stay retirement ready. How do you stay? You have a written income plan. You have a place to go and get your market growth money, but you don't just manage it all the same way and hope. You deserve better. Your family deserves better. And today's the day to act. Thanks for watching Wise Money. Look forward to seeing you next week.
From tax time bombs to Social Security insecurities, strategic investments that help clean up your junk drawer and keep your income engine running smoothly at Omega Wealth Private Capital. We're fiduciary, independent, holistic wealth advisors, and we're here to turn your have-tos into get-tos. So, would you like your retirement dreams to move from good to great? Give us a call. It's what we do, because we really want to. Thanks so much for joining us. Hope to see you in the office. Until then, I'm Brad Johansen. We'll see you next time on Wise Money.